big value in small caps. So what we're looking at here is the chart of the week. We are looking at the PE10 valuation ratio, which is the price versus trailing average 10-year earnings. And the reason we look at it that way is to smooth out the volatility in earnings through the cycle so that we can get a more consistent and logical anchor to compare valuations. So US small cap stocks have experienced a pretty decent reset in valuations, with the S&P 600 small cap index PE10 ratio dropping almost 40% from the peak. The S&P 600 PE10 ratio is sitting about 10% below the average of the past 25 years and is trading at a discount of minus 10% versus the S&P 100 large cap index. And that actually compares to a long-term average premium of plus 5%. So I would say that, yes, there is value in small caps, but probably I would call it small value at this stage. And specifically, it should be noted that as things stand, the S&P 600 is still trading, valuations are still trading materially higher than the 2003, 2009, and 2020 lows. And with global equities still in an entrenched bear market, and the Fed still pushing hard on tightening, there's every possibility that this cheap gets cheaper. But aside from the PE10 ratio, a number of other measures of relative value for small versus large that we look at are also tracking well below average. And so, there are pockets of both outright value, even if it's small value at this stage, and relative value that are emerging as the bear market progresses. So the key point there is US small cap stocks are starting to look cheap on this measure. If you like this video, be sure to subscribe, and also check out the topdowncharts.substack.com so that you can subscribe to the free chart of the week, which is what we've been looking at here.